This video we're going to talk about how actually we trade. But before that, I want to just take 30 seconds to jump over about what we did in our previous video. Our first video we were talking about was what exactly are derivatives. It was one of the three ways of investing in the stock market. The first one was buying stocks, where we make money only if the share price actually increases. You buy it at 100 and actually sell it at 200 and you make a 100 rupee profit. The second one is futures. Say you've got a stock, something's off with the company, and you think that the price from here will fall. You have the capability of selling first and then buying it back at a lower price, and again ensuring that you make a profit. In options trading is the one with most flexibility. You have the ability to use technical analysis to determine a range, decide whether the market will move only 200 points up but not fall below 400 points from where it is, and determine this range. And you determine this range by both buying or selling options. Now, I want to get into today's video, and today's video I want to talk about options trading and what exactly it is. The first thing we need to understand about options trading is it's a zero-sum game, which means in order for you to trade, somebody has to sell you something in order for you to get involved in the trade, which means you will either make money or they will either make money. There is no in between. The second thing that happens is, like in stocks, it's never ending and you can buy it, and the only time when you decide to sell it, you can sell it. In options, you have to decide an expiry either this week or next week or by the end of the month. You get to choose an expiry. Now, expiries typically, or a trading week typically starts on a Friday and ends on a Thursday. So if trades go Thursday 3:30 when the market shuts, you will know for that week for sure whether you have made a profit or made a loss. It is a finite trading. It cannot be infinite in trading. You obviously have the capabilities of trading or choosing to trade expiry weeks, which are 2 weeks, 3 weeks, 5 weeks, 6 weeks in the future, and monthly expiries as long as 3 months away as well. But for most parts, we're just going to trade weekly. So if I'm getting into a trade, I'm planning for next Thursday expiry dates are. You can do this by buying or selling an options price. And you have to then decide whether you want to buy a call or buy a put. Now, for basics right now, and to avoid the overwhelm, I'm going to stick to buying, and I'm going to break this down into what it is. Now, if you decide to buy a call, what does that mean? You are basically deciding that you think the market is going to move up from where it is. I'm assuming, say, the bank nifty today is at 43,000. If you're buying a call for the weekly expiry, you expect the market to be 43,000 plus, right? You're expecting it by the end of the week to be more than 43,000. So you are expecting the market to go up when you buy a call. Now, if you buy a put, you are expecting the market to go down, which means if you're buying a put today at 43,000 is the current market price, you are expecting by the end of the week the market to be below 43,000. So this is what trading is. Now, the exact opposite of this is when you sell. Like how calls and puts are opposite to each other, selling is a different way. Now, why would you buy a strike price and sell a strike price? I'll get into in the next video. But for right now, understand that if you are selling a call, you are expecting the market to go down, and if you are selling a put, you are expecting the market to go up. So that's the difference between buying and selling. So there is a lot of combinations that we need to determine why you choose a particular strike price, a particular expiry. And this is where people think that options trading becomes gambling, because there are so many variables. When you're buying stocks, you just buy, you do some reading, buy the stock and move forward. But this is a different ball game. This is a different way of trading. This is more technical and less on fundamentals. You're looking more about understanding why a particular index or a strike price will go up or down. So, other than that, there are only four things that can happen in a trade, or how you can essentially do. Like I said, is you are buying a call, which means somebody is selling you a call. Again, zero sum, which means you have to determine the price, and if this person is willing to sell it to you at this price, then only the trade actually triggers. Buying a put, you're expecting the market to go down, and somebody is selling you a put. This person thinks the market is going to go up. If you are selling a call, you expect the market to come down, which means somebody is going to be buying that call from you, which means he is expecting the market to go up. And selling a put, expecting the market to go down, that means somebody is going to be buying the put that you are selling. So that is the basics of understanding what trading is, what you have to choose. You have to choose your expiry. You have to decide whether you want to buy or sell, or then you have to decide whether you want to buy a call or sell a call, or buy a put and sell a put. There are only four combinations that can happen in your trading decision making of how you want to enter the trade. We'll get into the differences between buying and selling and the risks between buying and selling and what each one of them in a later video. But for right now, for most of the trading that I do, I am focusing mainly on buying. So for most part, this is what I will be looking at. We need to still understand why it's important to sell, because a lot of data comes from the seller's perspective. So we need to still be aware of it. So we're constantly going to be comparing these two when we are talking about trading. So that's it for this video. We're going to summarize this again in the next video and talk more about buying and selling and the advantages of buying and selling option prices in our next video. See you then. Take care. Bye bye.